very important aspect of trades, cycles. And knowing physics, think about it. Listen to the cycles of the waves. As trading is nothing but buyers and sellers, think of this as pit noise. Think of this as Black Friday, buying and selling. Think of, the thing is where to take the trade. Do you take the trade in the midst of the noise? You get chopped up. The higher the noise, the more energy there is. The more churning, the more you get chopped up. You want to grab those when the waves decide what they want to do. After the churn, you could just ride it out or ride it in. If you try to take the trade in the middle of the noise, and you can call it congestion, you can call it, you may win, you may not, but it's all about percentages. The key is to time those cycles. To time when to buy and sell. As soon as that noise starts to go ahead and subside, it'll tell you, boom, this is when. But you have to look at a macro aspect of it as certain times of the day. For instance, mid-afternoon, what are the waves doing? Are they one after the other very in rapid succession? Or do they take a while? At nighttime, what do the waves do? When is that noise going to happen to where you could jump in at the end of that noise and ride the wave? Another aspect is sometimes that high churn and that high massive sound won't move the market or won't move the waves as much as you think. Sometimes that happens. How do you gauge it? How do you trade it? Sometimes a congestion or a point where everybody expects a big breakout does not happen. And then you see that smaller congestion right after it like a wave, and it moves everything like crazy. It's about energy. Sometimes energy needs that catalyst to move all that energy. It doesn't happen at the point when you think it will. It's about timing that catalyst, timing that wave. Here we go. Sometimes you have those sharp bursts of noise. And sometimes the noise is long and drawn out. Gauge which one has the furthest potential for wave or for movement or for energy that pinup buyers and sellers demand. When they say markets are choppy, think of waters as being choppy. That last wave moved a lot of water. So what I did is, using the Zumbi with this concept in mind, gave me the ability to check out cycles. That was a loud wave. Let's see how it pushes the energy. Pushing it very well. Look at that. Pushing it. Pushing it. Even the seagulls are agreeing. As the rada recedes, you get more noise, but you don't get as much push. That's how I was able to figure out, basically, the system that individuals were waiting since the 30s to figure out how did this guy be able to pick time and price where the market's going to turn. The Zumbi is on that concept, built upon cycles, but also action-reaction. There's a very interesting relationship when you take the meat of that buying and selling aspect, the actual meat, that actual, that equilibrium point, that one point, and there's only one point in space that'll do that. You take your action reaction and your cycle off of that, based it upon when that noise, or when the extreme, from one extreme to the next, when it breaks, you're now looking at a new cycle, or the opposite of the cycle you had. So if you're in an uptrend and you take the extremes of what made that uptrend, not just the upside but the downside of the market, take the meat, take what makes it, and run your cycle. You'll be alarmed and amazed to see that when you run your cycle, you're going to find that's where the next extreme will be. And we're talking about 90% of the time, you're going to find an extreme at that point to take a trade, i.e. instant money. It's like a walking ATM. Take the peak of the noise of the waves when they come in and time it with the peak of the noise of the next wave and the next wave after that. And what relationship do you see? It's like the peak of market action to the next peak of market action. You're going to find a relationship. Every action equal and opposite reaction, not just price, but time as well as volume or volatility. Every movement up has its equal movement down. That's how markets generate.